Okay, so inventory cost flows and cost of goods sold, right? So in this case, we see that there is a merchandising, manufacturing, and merchandising, then manufacturing only, right? So let's have a look on the manufacturing first. So if on this side we have a manufacturing unit, then we are going to create the schedule of cost of goods manufactured. So cost of goods manufactured means in the factory we have some raw material, then we have some labors, and we have some manufacturing overheads. Total of these three will be the manufacturing cost, right? So that will be the manufacturing cost. So what will be the cost of goods manufactured? That will be once we add something and we subtract something. So how we will calculate this one, I'm just going to explain step by step. So look at this. We have here a schedule of the direct material used. If we say that we have some direct material inventory at the beginning, mean at the starting we have some direct material, we purchase some material, and we subtract some material, right? Means we purchased, at the end we find this is the material value we have at the end, means closing stock, right? So it means for the production we had some material at the beginning and we purchased something, right? Take an example, two big roll of paper that we had at the beginning, and three we purchased, total that will be five. So direct material available for the production, that will be five big paper roll, right? From where that we will create notebooks, for example, that you see in the Dollarama. Do we have spiral notebooks and everything? Now if we have direct material of inventory at the end of the period, we say from five we found that only one unit is left. So if one unit is left, or then rest of the amount, it means that direct material was used for that particular year. Okay, so 2 plus 3 is equal to 5, 5 minus 1 is equal to 4, or 5 minus 4 if it is direct material in closing balance is 4, then it will be 1. If the closing balance is 1, it means 4. So let's say closing balance is 1, one uh, big roll, paper roll is available in the factory. Hmm? uh, then we find that the direct material used is a 4. So now direct material, so direct material we have, direct labor we have, and manufacturing overhead we have. So we have these three things. So when we have these three things, three items available, we will add these items: direct material, direct labor, and manufacturing overhead. Once we add these three, it means total manufacturing cost will be available. If the total manufacturing cost is here, it means we will also consider that there is a something work in progress inventory, and that will be the opening balance minus the closing balance. The rest will be the cost of goods manufactured. So this is a work in progress inventory is different from the direct material. This is also material, this is also material. So direct material is somewhere where direct material was in the big godown where all the raw material is that we place, and from that this is in the factory production unit, this is in the factory where that they will try to convert that big papers into a notebook, right? So in that we will find that work in progress materials was at the beginning minus at the closing, closing stock at the end, then cost of goods manufactured. So this is the total cost of goods manufactured that we find. Once we find the total cost of goods manufactured, then that will be added here in the finished goods. Now the finished goods, how many finished goods that we have? We will see that we have some finished goods plus the cost of goods manufactured, cost of goods manufactured, and so goods available for sale minus finished goods is equal to cost of goods. So this is in the manufacturing unit, we find the cost of goods sold. So when cost of goods sold are available, now in the income statement, we will write sale minus cost is equal to margin. The gross margin minus operating cost is equal to net profit or net income. This is that we have done it here. So this is one part. Second, on the merchandising, if the only one merchandising business is there, then they will be finding like merchandising inventory at the beginning plus purchase, then minus a closing stock, and that will be cost of goods sold. Exactly the same thing here. So in this case, this is a one step. In this case, from here to here to here we reach. In this merchandising, let's say Best Buy is a merchandising. This is a step is just like this is equal to the same step here. This is the schedule of cost of goods or schedule of cost of goods. Here we write a merchandising inventory, and here we write a not a merchandising inventory. That is it. In this case, we did not buy any inventory. We produced it. We manufactured it. So when we manufactured it, it means there will be some goods. What kind of goods? Is it raw material goods? No. It's work in progress goods? No. This is a finished product. So we have a finished product here. It's just like the finished product that is to be bought by the merchandiser. So that finished products are here. Then at the beginning. So we have the cost of goods manufactured. Here, this was the purchase, and here this was what is the cost of goods manufactured. So cost of goods manufactured, that we find it here. Now the goods available for sale minus finished goods and cost of goods sold. Right. So that will be reflected here. And sale minus cost is equal gross profit minus operating cost is equal net income. Definitely we will do some practical of this, then it will be more clear. Look at this. This is the schedule of cost of goods manufactured. So we have a direct material in front of you. Direct material. What is the meaning of direct material here? This is a beginning of raw material inventory, 60,000. Add purchase of raw material. Then raw material available for use minus closing raw material inventory, then a raw material used in production. So it means 410,000 is a value of direct material. We find it. This is also a expenditure. We can say this is expenditure. We can say this is the cost incurred. Direct material, then direct labor is a 60,000. Then manufacturing overhead. If we talk about the manufacturing overhead, keep this thing in mind that these are the manufacturing overheads which are specifically related to the manufacturing of the goods, specifically related to the factory. Insurance of the factory, not insurance of the office. Indirect labor, machine rental, that we bought some machinery. Utility of the factories, mean electricity bill and water supply bill, that is for the factory. Supplies for the factories, right? Depreciation of the factories. Property taxes for the factories, not for the office or something, for the factory. Total overhead cost, that is the manufacturing cost. So direct labor, direct material plus manufacturing overheads. So we have total manufacturing cost the total manufacturing cost. How much is the total manufacturing cost here? So total manufacturing cost is here 410 plus a 60,000 plus a 350 is equal to 820 is the total manufacturing cost. For the merchandiser, we say this is a purchase, but here we have not purchased something. This is the total manufacturing cost that we have. We spent this much uh, of money and produce some goods. So that is known as total manufacturing cost. Now, so total manufacturing costs are here. Now we will add beginning, means work in progress inventory at the starting, and the closing stock mean ending work in progress. In the factory, some material is there, some material at the beginning, some material at the end. In the beginning we will add up, in the end we will subtract, then the remaining amount will be cost of goods manufactured. Manufacturing cost and cost of goods manufactured is different. Cost of whatever the goods has been manufactured in our factory, what is the price for that, how much we have spent for all those goods manufactured, right? What is the cost of that manufacturing? And here the total manufacturing cost is this much, that we add direct material, direct labor, and manufacturing overheads. Okay, so now next slide will show exactly the same thing, but in a simplified way. Manufacturing cost flow. Cost is there. We need to find the cost. These are the two costs. This is the product cost. This is the period cost. Now, the product cost, we know that the cost which is incurred on the product, that's it. Maybe raw material, labor, or manufacturing overhead. If we add these three, that will be the product cost. In the balance sheet, we will write here raw material, direct material used in the production of raw material. Then work in progress is with this one, direct labor and manufacturing overhead. That will be the work in progress. And last will be the finished goods. Finished goods is the cost of goods sold, right? And the period cost is the selling and administrative expenditure. So selling and administrative expenditure is also a period cost. Period. For the what are the expenditures that we made during the period? During the period means 1 year, maybe 3 months, or half year. During the period, those expenditures that we spent during the period from 1st of January to 31st of December is known as a period cost. That will be selling, marketing expenditure, office expenditure, office salary to the employees, administrative expenditure, stationery, generator, fuel, right? And incentives to the employees and everything. That is period cost. Now look at this. Product cost at raw material, part 1. Now we have a raw material as a beginning. Raw material inventory is an inventory carried from the prior period, means from the previous year inventory, right? Raw material used in production. So how we have calculated beginning of the raw material plus the raw material purchase, then minus closing stock of the raw material, means the raw material was used in this production. So this is raw material. Now, so that is known as direct material. Raw material is known as direct material here. So an item are removed from the raw material inventory and placed into the production process. They are called direct material. Direct material. Okay. Next. Because this material I gave you one example of the raw material. There were two big paper roll, three added, right? So 2 plus 3 is a 5. At the end of the period, we say there was only one. Then 4 is the direct material that we used. Okay. Now next, quick check. Um, at the beginning of the periods, like beginning raw material inventory was 32,000. Yeah. So just uh, you just open your calculator from your mobile phone and do some calculation. And what is the answer? What is the right answer of this? You will need to send directly to me in the chat. Beginning of the raw material inventory was 32,000, and during the month 276,000 of value raw material that was purchased. A count at the end of the month revealed that $28,000 value of the material that was still present, means closing stock. What is the cost of the direct material used? There are four options. Which one is the right one? Yeah. So what I can see, yeah. So I should send me one answer. Okay. But yes, I should send to all, right? Shafi. Yes. So here there are four options, and one option is correct. You will see that the option is 280,000, right? So how do we calculate this one? So beginning of the raw material, add purchase minus closing stock is equal to 280 raw material used in the productions. That is known as a direct material. Now, direct material we have here, plus direct labor, plus direct plus manufacturing overhead. That will be the total manufacturing cost. Total manufacturing cost. So we will now calculate the cost of goods manufactured next. Let's see. So this is the conversion cost. So direct material and manufacturing overhead is the conversion cost, right? That convert the direct material into the finished goods is known as conversion cost. This is the conversion cost. Okay, so now we will see that direct material are used in the production of 280. We know that direct labor was this much and factory overhead was this much. What was the total manufacturing cost incurred in the month? So just you calculate this amount and send me in the chat box. Calculate the total manufacturing cost, means direct material we have, then direct labor that will be added, then factory overheads will be added, then total cost will be 835. How we calculated? Just this is in front of you. Direct material, direct labor and overheads means manufacturing is a conversion cost with added, and that will be the manufacturing cost incurred for the month. Now you can see this is the total manufacturing cost. Now this total manufacturing cost that will go to the work in progress, because this is related to the raw material, the labor and manufacturing. This is related to the manufacturing cost. Now the manufacturing cost is here. Now this cost definitely will be added here and the beginning work in progress inventory. So once in the beginning we have some inventory in the work in progress and we have added this cost, means that will be the total work in progress for the period. So all manufacturing costs incurred during the period add to the beginning balance of the work in progress and minus closing stock means in the work in progress, that would be the cost of goods manufactured. Now, cost of goods manufactured, this is that we found it. And the last stage, that will be the finished goods. Opening balance of finished goods plus cost of goods manufactured minus closing, and that will be cost of goods sold. Right? This is cost of goods manufactured. Now look at this. Costs associated with the good that completed during the period are transferred to the finished goods inventory. Yes. Now next, we have here beginning work in progress is 125,000. Manufacturing cost incurred for the month is 835, right? So we know that work in progress, that is 125,000. That is work in progress was. Look at this. Work in progress at the beginning. We found it here. Work in progress at the beginning plus total manufacturing cost minus a work in progress, that will be the cost of goods manufactured. Let's see. So now we have opening balance plus we have manufacturing cost. Then we have a partially finished goods remaining in the work in progress. It means we will add something and subtract something. So that will come to the conclusion, and that will be 760. How we calculated. So this is opening work in progress plus manufacturing cost incurred during the period. Then we have a closing stock, the cost of goods manufactured. So manufacturing cost incurred during the period, and this is the cost of goods manufactured. Now work in progress, cost of goods manufactured. So cost of goods manufactured will go here in the finished goods as I explained. Then last will be the cost of goods sold. So cost of goods manufactured, that cost of goods manufactured here will be added in the finished goods product. For example, we have 1000 spiral notebook, and we have here some stock. That will be added, value of that will be added, cost of goods available for sale, and closing stock we deducted, cost of goods sold. How many books that were sold, what is the cost of that will be calculated here. Now look at this. Beginning of the finished goods inventory was 130. Cost of goods manufactured, that was 760,000. Means opening stock plus cost of goods manufactured minus closing stock at the end of the period, then 740,000 will be the right answer. Now, so we have concluded that the cost can be classified in many ways depending on the information that a manager needs. While the income statement looks similar for the merchandising and merchandising companies, the cost of merchandising and manufacturing company, the cost of goods sold calculated is different. This is because the manufacturing company make their product, whereas a merchandising company buy the product they sell. So manufacturing company must calculate the cost of goods completed by preparing the schedule of the cost of goods manufactured, and this schedule includes the direct labor, direct material, direct labor, manufacturing overheads, along with their analysis of work in progress inventory.